Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
And here we are. What's happening, beautiful people? How are you guys doing? Let me know how you're doing. Today, I want to talk to you about 5 most common trading strategies used by Forex traders in 2021. For the ones of you that don't know me, my name is Andrew, and for the last 10 years, I've worked in many retail and institutional Forex brokerages in Europe. Join me in this amazing journey and find out the secret corners of Forex trading from top industry specialists. Learn what most Forex brokers don't want you to know by watching our daily broadcasts. And if you like what you see, guys, please remember to like, share, subscribe on our YouTube channel and support us in delivering more great content. I'll give you exactly 30 seconds to absolutely smash that subscribe button. And then we're coming back with 5 most common FX trading strategies in 2021. Go on, smash that subscribe button. Don't be haters. I know you want to do it. Smash that subscribe button. All right, 5 common trading strategies in 2021 coming up. Right, guys, and we're back with 5 most common trading strategies of 2021. Again, I've decided to record these tiny videos, guys, in hope that I can help everyone understand the basics of Forex trading and what you should stay away from and what you should do when you come across different situations. So today, 5 common trading strategies in 2021, guys. I'm going to start with the first strategy, which is probably the most common one, the most used one for beginner traders and experienced traders as well, which is single asset directional trading, guys. What does that mean? One single asset, one single position, one direction. Yeah, for example, we could say euro US dollar, yeah, the most liquid currency pair in the world, the most traded currency pair in the world, yeah, with a buy position or a sell position. This is what single asset directional trading means. What is the downside of using this strategy? You're missing out a lot, guys. You're missing out a lot because, for example, euro might not move versus the US dollar immediately, but the euro might move versus the Swiss franc or the Japanese yen or the British pound or any other of its peers. So if you put all the eggs in one basket, you're missing out a lot. Is this strategy wrong? Not really, but you are missing out a lot. As long as you understand that you're missing out and your main goal for using this strategy is to learn and create a bit of positive track record, then there's nothing wrong with it. Right? The pros of using these strategies are that you're not going to get distracted by other positions. The cons of using these strategies are, if you don't get it right, your trade might close with a stop loss. Yeah, or it might close with a bit of a loss, or it might go in a bit of a loss until it goes the way you predicted. This is it. Now, let's move on to number 2, guys, which again is a very, very common strategy, again used by beginner traders as well as experienced traders, which is multi-asset directional trading, guys. We're starting to improve a bit. We're starting to develop new strategies. We're spreading our investment across all asset classes or across a few positions. Starts to make a bit more sense. We're not missing out as much. Right. What is wrong with this strategy? Absolutely nothing, guys. You're opening 2, 3, 4, 5 positions. Yeah, even though it's on one asset class, it's fine. As long as your positions are correlated, then you should be okay. As long as you keep the take profit and the stop loss levels in place, again, you should be okay. So what are the pros of using this strategy, the multi-asset directional trading? You're not keeping all the eggs in one basket, guys. Okay, so for example, if you're trading Euro USD, GBP USD, what does that mean? You're trading two so-called European currencies versus the US dollar. The pound might move faster, versus the US dollar, or the euro might move faster versus the US dollar. Okay, so this is the pro. You might go into profits a bit faster, guys. Now, also, if you're trading correlated positions, guys, so you're trading the European currencies on one hand versus the US dollar, and on the other hand, you're trading the US dollar versus the European currencies, you're increasing the chances of making more money. You're increasing the chances of being successful. Why is that? Just like I said a minute ago, one currency or one asset might not move as much versus the other asset. So by spreading your investment across 4 trades, let's say, and all 4 trades are correlated, then you should be okay. If you manage to get the direction right, guys, then very likely all your trades will close into profit. Now, let's move on to the third strategy, guys, which is used by more experienced traders. Okay, the scalping strategy, guys, trading intraday and scalping the markets. What does that mean? Opening many high volume trades for a very short time. Usually anywhere between 3 to 5 minutes. In and out, in and out. This is how you do this many times a day, guys. Now, what's wrong with this strategy? As high as your chances are of making a very good profit in a very short time, as high as the chances are for you to lose a bit of money in a very short time. Okay? This is the downside of this strategy. Now, you do have to have a bit of experience if you're using the scalping strategy, guys, especially intraday, because a lot of things are happening on the markets, and you're going to see the markets very bouncy many times. So you need to calculate your entry at the right time. Okay, so it takes a bit of experience. It takes a bit of navigating the charts and the markets, guys, for a bit of time until you're going to manage to use this scalping intraday strategy effectively. Now, this is a high-risk strategy, guys. So if you have deep pockets and you didn't invest everything you had in your trading account, which you should never do, then you should be okay. But do expect a bit of losses, guys, okay? If you're using big volume over a short period of time, if the trade doesn't go your way, you will have losses, okay? So expect some losses if you're using the scalping strategy intraday. Okay. Apart from that, there's nothing wrong with this strategy. This is what the banks are doing. This is what the professional traders are doing. This is what the institutional traders are doing. They only enter the market and exit over a short period of time with a huge volume. Okay, so if profit is on your mind and you want to use this strategy, then you might make a very good return over a very short period of time. However, you might make a big loss as well, okay, which you might recover on the next trade, on your next entry. So if you're using the scalping intraday strategy, guys, you're going to have to open at least 5, 6, 7, 10 trades, over a very short period of time. This is it. Let's move on to number 4, guys, and see what is the fourth strategy used by traders, beginner and experienced traders. And number 4 is the hedging strategy, guys. What does this mean? Basically, you're opening a buy and a sell position in the same time on the same asset, okay? Or you're trading 2 different assets. Okay, but one of your assets will have to close, one of your positions will have to close in a bit of a loss. Okay, so for example, you see Euro US dollar ranging, guys. The market is going sideways for quite a few hours now, for a couple of days maybe. And you see it going up and down to the same levels. It doesn't want to move. Now, at this point, you could use the hedging strategy, guys, which means, once again, opening a buy and a sell position in the same time. Very careful, though. This strategy is usually used by experienced traders. Very careful. You will have to close one of your trades with a bit of a loss, guys. Once you manage to establish the direction of the market up or down, you will have to let go to one of your trades, okay, which will close in a bit of a loss, making up for the loss and doubling the loss and doubling the profit with the other trade once you got the direction right. Right. Now, the pros and the cons of this strategy. Why should you close a trade with a bit of a loss? What is the point in closing a trade with a loss, guys? Okay, then what is the point of opening a buy and sell in the same time if you're not sure of the direction? Just wait for the markets to give you the direction. You don't have to open a buy and a sell in the same time. You don't have to necessarily close a trade with a bit of a loss. Yeah, just because you weren't sure of the direction. Okay, this is sloppy trading, guys. If you do that, it's risky trading. Okay, one day you're gonna forget to put that stop loss where it has to be, and that day the markets might move against you. What's gonna happen then? You're gonna get into a margin call, or you're gonna have a big loss on your trading account. Okay, this is the downside of the hedging strategy. For professional traders, this strategy might work. For beginner traders, be very careful, guys, if you decide to use the hedge. Okay, unless you know all the ways of hedging. Okay, you can hedge on different asset classes. You can hedge many ways. Okay, don't just get stuck on the buy and sell position in the same time on the same asset. It might not work for you as well as you thought. Which takes me to number 5, guys, and probably this is the most important trading strategy: professional portfolio, multi-asset trading, long or short. Okay, and this is where it starts getting complicated, and for some of you it might start making sense even. So look at the bottom of the chart, guys. You're gonna have examples on all 5 asset classes. Yeah, from left to right, you're gonna have currency pairs, commodities, stocks, indices, and cryptocurrencies. This is how professional traders trade many times, guys. They mix long short portfolios. They mix short term with long term trades. Okay, typically stocks and indices tend to be traded longer term than commodities or cryptocurrencies, let's say, yeah, due to various reasons. It might be the spread, it might be the swap, yeah, the rollover fee that you pay by keeping your trades open overnight. So this is how professional traders trade, guys. Now, when you go for this type of trading strategy, you have to be very careful and know inside out all the correlations and all the asset classes, guys. Otherwise, you might contradict yourself. You might get caught in the crossfire. Okay, and you might not do as well as you thought you're gonna do. Now, this is a very good way to also hedge some of your trades, guys, because think about it. Some of your trades will go into profit straight away. Some of your trades might drag for a bit of time. Yeah. Now, or going into a bit of a loss. Now, the trades that are already in profit, guys, are balancing the ones that are losing. So your balance, the balance you have on your trading platform, won't be in danger as long as the winning trades are more than the losing trades. Okay, and then it's up to you when you start closing the trades one by one as they go into profit and as they hit your take profit levels. Okay, from there on, you need to know how to play with your positions. Okay, some positions might have to be closed faster than others, even if they didn't reach your take profit level just yet. Okay, you're going to have short-term positions, you're going to have long-term positions, you're going to have buy and sell positions. Very useful strategy as long as you know how to use it and as long as you know all the asset classes inside out, guys. All right. Now, if you have more questions about trading in general, if you need any sort of information about trading, guys, feel free to contact us on instructfx.com, info@instructfx.com, or my direct email, guys, thechartwhisperer@gmail.com, and I will do my best to help. Also, once again, I'm supporting all retail traders that had a good or a bad experience in online trading to come forward and talk to us and make their experience public to the entire world, guys. Let's show the entire world how your experience was. We're going to make sure your voice will be heard through our daily broadcast. So just contact us, guys. Let us know what you've been through, and we will book an interview with you one-on-one. Now, this is it for the 5 minutes of wisdom today, guys. We're going to come back in a few minutes with US markets open with Neil Wilson from the heart of London, guys, as we have the busiest week in the earnings calendar. Stay tuned. We're coming back live in just a second.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Happy Monday, everyone. How are you guys doing? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How are you guys doing this afternoon? How was your weekend? How are you feeling? How are you feeling about 2021 so far, guys? It's 25th of January today. We're only 5-6 days away from the last day of January. The first month of 2021 will be over. Let me know in the comments, how do you feel about 2021, guys, so far? Now, if you like what you see, guys, please remember to like, share, subscribe, and support us on our YouTube channel in delivering more great content, guys. It helps a lot in delivering more great content if you smash that subscribe button. You can smash the like button too if you like it. If you don't like it, still smash it. It's not going to cost you anything. Don't be haters. Come on, it's just Monday. So let's get down to business and see what's happening in the markets today. Monday, 25th of January, 2021. U.S. markets open. Coming up. Right, and we're back with the hottest lines for today, guys. Once again, good morning, America. Good afternoon, Europe, and happy Monday, people. Smile a bit, love a bit, live life a bit, as much as you can. Right, let's see what's happening in the markets, guys. U.S. COVID cases drop. California back in business. U.S. stock markets point to a positive opening today in the busiest week in the earnings calendar. The U.S. House of Representatives will formally charge the ex-president Donald Trump today, inciting to insurrection following the events at Capitol Hill earlier this month. In Europe, guys, Germany, Netherlands, and the United Kingdom and other countries are talking about extending the lockdown measures until February the 3rd. In a third effort to contain the virus, as new COVID strain is found in many European countries. The earnings season continues with Microsoft, Johnson & Johnson, Starbucks, and American Express to report earnings for the fourth quarter and the first quarter tomorrow. And Bitcoin, guys, everyone's favorite, is back at $34,000 today after testing the lows at $31,200 over the weekend. Welcome to the U.S. trading session, everyone. Let's have a quick look at the economic calendar. Let's have a look at the earnings calendar and see what is happening in the markets. And Neil Wilson will join us in about 10 minutes, guys. So we're going to start with the economic calendar. Let me bring it on the screen. There we go. Okay, and see what announcements we had already today, what announcements will follow. Okay, so not a lot is going on in the economic calendar today, guys. We had 10:45 this morning, GMT +2. ECB President Christine Lagarde opening the trading week with a press conference from the European Central Bank, followed by business expectations from Germany and the IFO business climate. All three announcements from Germany this morning came out red, guys, pushing the euro lower once again. At 12:45 GMT +2, we had the German president holding a press conference, and then we had the ECB member holding a press conference as well. Okay, this is what is happening in the economic calendar today. We're going to have another press conference from Christine Lagarde this afternoon at 1800 hours GMT plus 2. So already an hour and a half into the U.S. markets open. We're 9 minutes away, guys, from the U.S. markets open in what seems to be the busiest week of the year so far in the economic and the earnings calendar. So a lot of press conferences, guys, today. But apart from the business climate, the IFO business climate in Germany and the business expectations for January, guys, which came out in red, nothing really big happened. We had a sluggish European trading session. Now, tomorrow, guys, we're going to have more going on in the economic calendar. There we go. Okay, this is the economic calendar for tomorrow, guys. We're gonna start nice and early in the morning with a lot of announcements, with 4 announcements from the UK, including the unemployment rate for November. Okay, which is expected to rise to 5.1%. Versus a previous of 4.9%. Now, also today, guys, we're gonna have the World Economic Forum, the annual meeting, which usually happens in Davos in Switzerland. But I don't have to tell you why this year it didn't happen in Davos, and it's just going to be a virtual economic forum. However, very interesting to follow, guys, as many heads of state will be there. All right, tomorrow, again, we're going to have Australia celebrating Australia Day and India celebrating Republic Day. So these markets will be closed. Okay, now this World Economic Forum, the virtual one this year, will end on Wednesday, guys, after 2 days. Okay. Now, in the afternoon, we're going to have the HPI composite on the US dollar, the CB consumer confidence, and the API weekly crude oil stock as every other Tuesday. And Wednesday, we're going to have the API crude oil inventories. This is what is happening with the economic calendar. So get ready for a very, very exciting week, guys, with lots of announcements and lots of twists. Now, moving on to the earnings calendar. Okay, we are in the middle of the earnings season. Already last week, we saw some big names starting the earnings season. And tomorrow, guys, today we only have two reporting. We have Kimberly-Clark, which already reported earnings per share higher than the forecast, and the revenue as well was higher than the forecast for Kimberly-Clark. We're gonna have Carnival Corporation announcing after market close today as well. They expect to do not so well this year. They expect a negative earning per share of $1.89. Okay, and the forecast for the revenue is only $110.79 million. Now, tomorrow, guys, it's a big day. We're going to have Microsoft. We're going to have Johnson & Johnson reporting. We're going to have Verizon, Starbucks, the coffee giant, AMD chips reporting as well. What else? We're going to have American Express, 3M, General Electric, and Lockheed Martin as just a few of the big names that will report this week. Now, very important to know, guys, for the stock traders, I did not get the chance to do a webinar on earnings season and explain to you how earnings season works. But I hope I will be able to do this week. So when you're trading stocks, guys, if you want to trade the earnings season, right, usually you have to position yourself on the market the day before. Okay, the company releases the earning figures. Why is that? Most companies will report either after market close, after the US market close, or before the US market open. So if you want to catch the movement, if you want to catch that gap that might happen at the opening, you might want to position yourself on the market the day before. Let that position go, and then obviously after you do your homework and you're almost certain of the outcome, okay, and then take it from there. You're going to pay a rollover for a day or two, which is fine. The rollover is a very, very small percentage from your trade, so it shouldn't affect your profits big time. Yes, you're going to have the spread where the commission to pay when you get in or out the trade. However, this is how earnings season works. Usually you position yourself on the market the day before. They announce the earnings numbers. So you're there, you're on the market, you're catching the movement. Okay, as once again, many of them or most of them will announce either before market open or after market closing. Right. Okay, so big things going on. We're going to have Neil Wilson joining us in a few minutes, guys, probably in about 5 minutes from now. But meanwhile, let's see what is happening, what's expected to happen with the markets today, guys. So again, an article by Peter Nurse, which is amazing. I've been following Peter Nurse for quite some time now, and his articles are spot on almost every single time. So kudos, Peter Nurse. So U.S. stocks are seen trading in a mixed fashion today, with the tech sector in focus ahead of a busy week of corporate earnings and a Federal Reserve meeting. Yes, to top it up, guys, we're having a Federal Reserve meeting that starts today. Again, for about 2 days, it's going to last. At 7:05 a.m. Eastern Time, the Dow futures were down 41 points or 0.1%. The S&P 500 futures traded 8 points or 0.2 higher, and the Nasdaq 100 futures climbed 114 points, almost 1%. This week, as I was saying, is the busiest of the corporate season to date, with more than 1/5 of the S&P 500 index and a third of the Dow Jones Industrial Average components scheduled to release earnings this week. The tech sector will be the primary focus, and expectations are running very high, guys. Microsoft reports after close tomorrow, followed by Apple, Facebook, and Tesla a day later on Wednesday. The results could push the combined market cap of the FANG stocks, here the big boys, the big players, Facebook, Amazon, Apple, Netflix, and Google, Alphabet, back above their all-time peaks at $6.16 trillion. So Monday is comparatively compared. Right, Monday is quiet, guys. I'm not going to struggle. I don't know what's happening with me. Either I'm nervous, or I'm excited, or something is going on. And sometimes I am struggling to pronounce some words. So Monday is quiet, with only Kimberly Clark of any note set to update. All three main cash indices posted again for the week last week, as the Dow Jones Industrial Average registered its fifth positive week in 6, while the S&P 500 posted its third positive week in 4. The Nasdaq Composite recorded its best week since November and fifth positive week in 6. So as soon as the stimulus measures were announced, guys, by the new U.S. government, we see the impact on the stock markets. So for stock traders, guys, please remember, stocks are also incorporated in the indices, guys, in the S&P 500, in the Dow, in the Nasdaq. So if you're going to trade stocks individually, you might want to have a look at the indices as well. It might be worth it. That's my tip to you for today. Now, today there's something really big happening, guys, with Donald Trump. Okay, so U.S. House of Representatives to bring Trump incitement charge to the Senate, launching second impeachment trial. The same trial which was delayed just ahead of Joe Biden, being sworn in. So what is happening? The U.S. House of Representatives today will formally charge the ex-president Donald Trump with inciting insurrection in a fiery speech to his followers before this month's deadly attack on the Capitol Hill, signing the start of his second impeachment trial. 9 House Democrats who will serve as prosecutors will proceed through the building where hundreds of Trump supporters fought with police, leaving 5 dead at about 7 p.m. on Monday, carrying the article of impeachment to the Senate, where Trump will face trial. A similar ceremony was carried out for Trump's first impeachment trial exactly 1 year ago, guys, last January, when the House clerk and sergeant at arms led a small procession of lawmakers through a hushed Capitol. It will mark 2 historic firsts. Trump is the only U.S. president to have been impeached by the House twice, and will be the first to face trial after leaving the office. Conviction in the Senate could result in a vote to ban him from holding future office jobs. Now, and probably this is the end goal, guys. Because many people don't like Donald Trump. Many people did not agree with the way Donald Trump led the U.S. economy, even though, in his defense, one thing he did very well. He managed to strengthen America's economy, and he managed to bring the unemployment numbers to record lows, guys. The same record lows which haven't been seen for 50 years. Okay, so when it comes to business, he kind of knew what he was doing. When it comes to public speaking and mentoring other people and acting like a father, guys, well, this is up to you to decide. But he did do some good things as well. Okay, it is very misfortunate that Donald Trump has this end to his mandate. He will definitely be in the history books forever as the 45th president of America that managed to make America great again up to an extent. Yeah, unfortunately, he did not manage to stick to that promise. Yeah, all the way through to go the extra mile. But anyway, it is what it is. Let's see what's going to happen. Either way, it's going to be very, very tough for Donald Trump. The U.S. Senate still has a good few weeks to go. Okay, until the new U.S. president will be settled, and all the new views of the White House will be implemented, with the government. This is what is happening so far, guys. Let's have a quick look at top 5 things to know in the markets today, and then we're going to welcome Neil Wilson, guys, from the heart of London for a great round of market talks. So number 1 on the board, guys, and one of the good news today, California to lift lockdown as case numbers fall. California Governor Gavin Newsom is expected to lift the stay-at-home order, a change that could allow restaurants and gyms in many, many counties to reopen outdoor dining and services, the LA Times and others have reported. The news comes as the 7-day average for new infections of COVID-19 nationwide fell to its lowest since the start of December, while the number of those hospitalized with the virus fell to its lowest in 6 weeks. Right, finally, a bit of hope across the pond. The pandemic news from elsewhere was less bright. France already running a nationwide 12-hour curfew, may go into full lockdown again later this week. The government confirmed this morning. The UK is looking at tightening its borders further. The Mexican president, Andrés Manuel López Obrador, became the latest world leader to test positive for the virus. That was confirmed by Bloomberg as well. I saw it about an hour ago, guys. Now, number 2 on the board, guys, Biden's Buy American order. Joe Biden, the new U.S. president, is expected to sign a new Buy American order, underlining the essential continuity of U.S. trade policy despite the radical change of tone expected from Donald Trump's administration. According to the Wall Street Journal, the order policies will include tightened government procurement rules to make it harder for federal agencies to buy imported goods, and will revise the definition of American-made products, raising local content requirements. Biden's policy initiatives will continue to compete for attention as the House of Representatives sends the article of Donald Trump's second impeachment to the Senate, most likely this afternoon. Some have speculated that the fresh impeachment trial will make it harder for Biden to gain bipartisan approval for his $1.9 trillion stimulus package. Right, let's see what's going to happen. We're going to see what's going to happen. This action had to be taken from my point of view, guys. Okay, considering 5 people died and 7 other people were severely injured at the assault on Capitol Hill a couple of weeks ago. Number 3 on the board, guys. Stocks set to open higher today. Dallas, Chicago Fed surveys due. U.S. stock markets are set to open the week higher on the back of improving news flow from the pandemic and confidence in sustained high liquidity given the loose state of U.S. fiscal and monetary policy. The latter is expected to be reaffirmed on Wednesday after the Federal Reserve's latest policy meeting. All right. So yes, big things are happening. Let's see what they will do. Probably nothing. Yeah, they're just going to boost the stimulus measures, and they will talk probably about keeping the interest rates at close to zero as possible for quite some time from now, allowing people spending to help boosting the economy. Now, number 4, guys, bubbles in China. I don't know exactly what this article means. I'm sure it doesn't refer to bubbles in the bathtub. Let's see. Retail investor mania is alive and well, not just in the US. Tencent stock in Hong Kong shot up over 10% in a move powered by retail auction in the futures and options market. The move had no visible single trigger, but concerns about Beijing's attitude towards the immensely rich and influential tech giants in China have eased since Alibaba founder Jack Ma reappeared in public for the first time in over 2 months last week. Tencent stock has now gained 30% in 2 weeks, adding some $230 billion in market cap in the process. Bubble vibes were also out in force with the announcements that short-form video company began marketing an IPO that it hopes will raise $5 billion and value the company at over $60 billion. You know what, guys? These guys just gave me a brilliant idea. I'll probably run an IPO for InstructFX at some point. Right. And the last but not the least, guys, crude oil prices recovered some momentum after last week's sell-off by 6:40 a.m. Eastern Time. U.S. crude futures were up 0.8%, while Brent futures were up 0.5%. Fears over a hit to Chinese demand continue to bubble away given lockdown in various regions in China as well, not only Europe and the US. The city of Tongwa and the North Korean border had reportedly announced food shortages since being locked down 5 days ago. Right, okay, these are the top 5 things to know in the markets today, guys. I will welcome Neil Wilson in about 30 seconds from now or so. Yes, so stay tuned, guys. We will be coming back with Neil Wilson, Chief Market Analyst at markets.com from the heart of London in 30 seconds. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, guys, beautiful people. We are back with Neil Wilson, Chief Market Analyst at markets.com from the heart of London. Happy Monday, Neil. How are you?
Hi, yeah, I'm good, thank you. Yeah, how are you?
Good. I am shocked, mate, to see what's happening in the markets today. But first, what is the situation in London with the new COVID strain and the lockdown measures, Neil?
Yeah, well, I mean, I think clearly hospitals still under pressure, but the sort of 7-day rolling average of cases is coming down among most age groups. So I think the lockdown is having that sort of positive impact on case numbers. And then meanwhile, the vaccine rollout continues at pace, and the UK doing very well on that front. Although it's got to be said that we've created this longer time frame between the first dose and the second dose, and there's some doubts about the efficacy of doing that. Some concerns about maybe the latest strains are more deadly. The Prime Minister said that, but then scientists were immediately on saying, look, we're not really sure about that. It might just be that it's more transmissible, so it affects more people, and therefore gets into sort of care homes more easily, that kind of thing, hits the vulnerable more easily. So on the whole, we're just waiting for a few more weeks, and hopefully we'll be through the worst of it.
I saw an article earlier on. Many European countries and the UK as well are talking about maybe extending the lockdown measures. Wow, as the new COVID in more European countries.
Yeah, I mean, there's been various reports. I mean, I've seen conflicting reports where, and I think it's a bit of sort of, the way governments operate, they sort of push different things to keep people, it's all coming from the same source basically, but it's diametrically opposed. So on the one hand, they're talking about a halfway house lockdown extending for 3 months beyond Easter, until everyone over 50 has been vaccinated fully. But then at the same time, Prime Minister saying that, they might be able to loosen some restrictions before the middle of February. So it's a bit of sort of giving with one hand, taking away with the other. I think they're trying to make sure that people, I guess, adhere to the rules and they still have sort of maximum kind of optionality with what they do. They've been caught out several times now, sort of saying we're going to be doing X, Y, and Z, and then they've had to sort of backtrack on that because things have got out of hand. So I guess they're just trying to they're muddling through. I don't think they still really know what they're doing. I don't think anyone does. I think we're all just muddling through.
Yeah, you're right. The thing is, at least from my point of view, if we're gonna see an extended lockdown till Easter, I think this year economically will be catastrophic for everyone involved, including EU, UK, US, everyone that's going to be in lockdown for another 3 months.
Yeah, it's much more of a dramatic hit. I think this time, because this is a long lockdown against a weakened body, economic body. That if you think of it like a physical body, it's been weakened by last year's lockdown and then the November sort of the lockdowns that we saw in Europe and the UK sort of into the autumn, and so the economy's weakened. People have really taken they've been dealing with for a long time, and so it's a lot of the intangibles that you lose as well. The sort of animal spirits, the sort of the zeal, the appetite, the productivity, the sort of all these things that keep people moving forward and keep the kind of economy moving. We're just getting all a little bit used to sitting on our bottoms at home and either working like we normally do, like myself and you. Or people on furlough. So, but either way, it's not the sort of dynamic, kind of energized sort of economy that we're used to. So, I think it's going to do long-term damage.
True. Correct me if I'm wrong. The way I see it, if they're gonna stick to the lockdown measures till Easter, then in order to recover, they're gonna print an awful lot of money, which they're already doing. Correct?
Yeah.
Then the interest rates will stay close to zero or at zero for a very long time.
They will try and keep them close to zero for a very long time. Yeah, that's the thing. I mean, governments have borrowed heavily, and therefore the central banks need to be on side. If central banks allow, sort of taper tantrums to happen, they sort of tighten too quickly. If they tighten policy, so raise interest rates or reduce the amount of bonds that they're buying too quickly, then the market's going to get quite upset and it's going to force up interest rates. But at the moment, it looks like the market buys into the fact that central banks are on side, and that means they anchor the short end of the front end of the yield curve. So short-term interest rates mean nice and low. You do see some sort of movement up the top end at 10 years and 30 years. You're seeing the steepening of the curve because people think that while central banks are keeping yields locked down now, in 10 years' time, they expect yields to be, interest rates should be higher. So, as long as central banks do their job on that front, but I think that should allow, as long as central banks stay on side, and no reason to think they won't, because they've learned their lesson over the last 12 years. Governments should be able to continue borrowing quite high levels because there's no pressure on rates. That the bond vigilantes have disappeared, and there's no pressure on interest rates.
You're right. Now, if last year I thought towards the end of 2021, the things will likely get closer to normal if we're going to see this lockdown extended, and by the way things are looking right now, I think it's going to take 5 years for the economy to recover, at least. Now, spoiler alert. I saw one of your articles today on Investors Chronicle. Okay, the trader market outlook for the week. So I'm going to ask you, what should we expect from the markets this week? Okay, and since your article, I'll let you lead the way.
Well, I think looking at this week, the Federal Reserve meeting on Wednesday is going to be important. They're obviously not expecting any major upset from the Fed. I think based on what Jay Powell said, last week, it's going to be very much or was it 10 days ago, but a few days ago anyway, he's basically saying now's not the time to be talking about tapering interest rates. So I think we'll be seeing that play out, and I think he'll be on the dovish side. And then in earnings season, of course, gets sort of hits top gear this week. We've got Tesla, Apple, Facebook, Microsoft. They're all on the calendar. I think that's the calendar I can see there. So they're the major earnings releases this week. The sort of big Dow components. I think there's 13 Dow components this week, and it's the busiest week for earnings season. So lots happening. I think Tesla is interesting, of course, because it's had such a ramp. It remains volatile. And then Apple, which has just hit a record high this afternoon, off the back of a couple of strong sessions again. So investors clearly thinking that Apple's going to deliver very, very strong earnings for that holiday quarter.
Let's go over Apple review, because I gave it a read earlier on, and it's very, very interesting. You said look for Apple to beat fairly low estimates, with holiday spending on the new iPhone and other devices likely to support a decent quarter one. Chinese demand is holding up, and shares had to come into earnings season a little off the December peaks, though they are now at fresh records on expectations of a strong quarter. So earnings per share expected at $1.4 based on 30 analyst estimates, while Apple seems set to deliver its first 100 billion quarter in sales. Yeah, consensus revenues estimates 102.6 billion, which would imply 12% year-over-year growth. Okay, so Apple is expected to do really, really well.
Yeah, I think that launch quarter for the iPhone 12 is really important. This is the first full quarter of the iPhone 12. We think that people were holding back purchases and refresh, the sort of upgrade cycle, which is now a sort of slightly longer term cycle than maybe it used to be maybe like 2 years now, maybe more like 3. People have been holding off, delaying upgrading their iPhones, waiting for that 5G, because it's the 5G phone. So we think it's a very strong launch quarter. Looks like there's evidence that iPhone sales in China are doing very well, that they're accounting for quite a significant portion of iPhone sales, of smartphone sales in China. And then probably that sort of broad work from home, stay from home kind of trend, which persists. And as we see with more lockdowns, schools are still shut. So people are scrambling to find their kids a laptop. They're scrambling to find devices. It's real. It's back where we were in April, the sort of pandemic winners, and I think the COVID winners, and I think Apple's doing well from that. I think wearables and home technology, again, people are not spending on travel, and travel is a big expense for the sort of higher earning, more affluent Apple type customers. They tend to spend an awful lot on travel as well. So I think you've seen a shift into sort of more homeware, gadgets, devices, that kind of thing. So all those trends playing well for Apple. Plus, you've got the Apple One bundles, these new bundles for the services. I think it all conspires to make for a very solid earnings update from Apple that we will see, and probably justify some of these share price rallies that we've seen over the last sort of couple of days.
True, but the 5G is bad for us. It's eating our brains. The vaccine for us. They are injecting microchips, right? Check this out about Apple. Again, in your article, Morgan Stanley, in a note, raising its price target on the stock to 152 from 144, wrote that it is adding 2 positions ahead of a likely record quarter. So if Morgan Stanley said that public, what do you expect from Apple? It's a no-brainer.
Yeah, I mean, upgrading just before the earnings like that is bullish. They're clearly very bullish on the stock, and the street remains very bullish on Apple, despite it being at record highs. The same can't be said for Tesla. The street remains divided on Tesla, whereas with Apple, you think it's still very much one-way traffic.
Now, you mentioned Tesla. There it comes. So Tesla comes into its fourth quarter earnings with a lot to live up to after the stock price exploded in the last 2 months, as well as what's his name, Elon Musk's bank account. Yeah, when he exchanged half of his net worth into Bitcoin. Shares have more than doubled in value from 400 to 850 since November, amid a colossal momentum trade that means Tesla carries a market cap of 800 billion. Revenue is expected at 10.3 billion, with earnings per share estimated at $1.01. Okay, so earlier this month, Tesla reported fourth quarter deliveries hit 180,750,000 units, which brought 2020 total deliveries to 500K. Now, Tesla, what's expected to happen, up or down?
Well, I mean, you can toss a coin there. I think they've had a good quarter in terms of deliveries. I think you'll get another sort of positive kind of update in terms of the production in globally, the US, Germany, China, whatever. I think production is ramping up. They're starting to deliver more vehicles. Question marks remain, obviously. The fact is that its market cap implies it's selling basically every vehicle on the planet, and there being no competitors. It doesn't make sense. So clearly there's a problem there. But I think you're looking. One of the reasons for that market cap is because of software service revenues that are expected to come through, which are sort of 100% margin type businesses. So I think you can accept that it's going to have a highly valued share price. It's going to be more highly valued than, say, GM or say Volkswagen, because it's not just about selling cars. But as these sort of old world car makers catch up, they're looking very interesting, and they can really make Tesla struggle, I think, over the next few years. And you've seen a big rally for GM and Ford in the last couple of weeks, off the back of some real enthusiasm for what they're doing in the electric vehicle space, tie-ups with some of the big tech names. So these are interesting times, I think, for the electric vehicle market. And I think Tesla's not going to be it's not going to have a clear open field in front of it. It's going to have a lot of competition going forward, and that sort of makes you worry about the valuation that is implied from the stock at the moment. Not saying that it's not going to do well, not saying it's not going to be a profitable company that leads the way perhaps with battery technology or whatever, but it's whether or not this multiple that we've got at the moment can be justified.
They have a lot of competition indeed. November saw 198% rise in hybrid and pure electric vehicle registrations versus a 14% decline overall for the new car registrations. Because last week we saw the new car sales in Europe took a massive hit. Massive hit. So Tesla still remains, let's say, an expensive vehicle. Okay. An elite vehicle for most of them, but I think they're on track. And they're gonna do all right. So, quick look at what's gonna happen this week. What big names we're gonna have. So tomorrow we're gonna have 3M Co, American Express, General Electric, Johnson & Johnson, Verizon, AMD, Microsoft, and Starbucks. Wow! A handful of companies. And on Wednesday, AT&T, ADP, Boeing, Apple, Facebook, and Tesla. Right. Quick one. Any news on Facebook? I didn't get the chance to check. I know they weren't doing as well as everyone else is thinking. Do you have any updates on Facebook or not yet?
Not yet. I'm working on for our clients, producing an update on Facebook in the next day. But what I would say is that when you look at the sort of digital kind of trends that we've seen with Netflix, and I think that the way they've picked up customers, I think Facebook is really tapping into local, getting more from local advertisers. It's proving to be about the best way that small companies that are riding out the pandemic are reaching their customers. So I think it's still the go-to place for businesses to advertise alongside Google. And I don't think necessarily the regulatory sort of overhang is that much to worry about right now.
All right. Now, the US dollar seems to be strengthening this week on positive vibes on the new US president. And the last but not the least, the Bitcoin. What's going on with the Bitcoin? 34,500 almost for Bitcoin this afternoon after testing the lows at 31,300 over the weekend. Now, is it in a downtrend channel? Does this look right to you, Neil?
Let's have a look. I'll just say, Yeah, I mean that looks that looks like a downtrend to me, and we're making lower lows, and we're making lower highs. So I'd be hesitant to be adding in at these levels. I think it's made a clear top at 40k, and yeah, that sort of price action is telling you it's a downtrend. That you've drawn the lines there in the chart nicely. I mean, I'd be hard pressed to argue against that. I think you're sort of clutching at straws if you suggest that it's ready for a bounce or something. There's no real indications from the price action from the charts anyway. So I'd be looking for again retesting some of these sort of big levels on the way down. Looking for sort of, well, you could be looking at 20,000 again. I think that's the sort of level that you might see before there's another big bull cycle that takes it higher again.
Right, that's what I was thinking as well. The only thing is the candlesticks seem to be supported by the 200 moving average somewhere along the way. Yeah, if you see it. However, it looks like a downtrend. I'm keeping an eye on this stop right now to see what's it going to do. If it's going to turn around and drop, then we're probably looking at the continuation of the downtrend. If it's going to settle above and break above this, then who knows? Maybe we were both wrong and a bit higher. But
very
seeing
possible.
31, 32, maybe 30 once again before another Elon Musk comes forward and says, I'm going to exchange half of my net worth in Bitcoin. All right. So busy week. I'll talk to you again on Thursday to see what happened. Thank you ever so much for being with us today, Neil. I'm looking forward to seeing you on Thursday. Happy trading, by the way.
Thank you. Cheers.
Have a good one. Cheers. Take care. Right. So we had Neil Wilson, guys, from the heart of London. Now I'm going to take 30 seconds to catch my breath. And then we're coming back with the charts of the day and the signals of the day. We're already half an hour into the US trading session. Stay tuned. We're coming back live.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, guys, and we're back. Happy Monday, everyone. We're back with the charts of the day and the signals of the day. But first, let me know how you're doing, guys. I see we have quite a few viewers today. So first of all, thank you for joining us this afternoon. Second of all, let me know how you're doing, guys. If you're struggling with anything, type your comments, talk to me live, and I'll do my best to help. So charts of the day, half an hour into the US trading session in this beautiful Monday afternoon. $52.34 for crude oil WTI after crude oil shed a bit of gains in the last couple of hours, 3-4 hours. Okay, it dropped from 52.88, testing the lows at 52.34. Overall, it seems to be pushing higher, guys. We might be looking at an uptrend, looking from the technical analysis perspective, with a couple of higher highs and a couple of higher lows. So let's see. Looking at the RSI and the stochastic, they're both giving us good signs. It might be an uptrend, guys. We might see a bit of a push from oil, even though it's currently below the 200 MA. We might see it pushing a bit higher. Now we're gonna have a look at the signals, guys. Don't jump the gun. And then we're going to get more details. Right, big drop on the euro, guys, on a 1 hour chart. 121.20 for the euro as things stand right now. And by the looks of it, it keeps dropping. Probably traders will move their take profit targets for the downside around the 121.80, 120.82, or 121 flat to be precise. Another 21 pips from where the market is now. Okay, RSI stochastic pointing downwards. A lot of weakness in the euro, guys, following a few bad announcements today. We're going to have another press conference from ECB President Christine Lagarde in the next hour or so. So let's see. Maybe the markets are just just being priced in for now. Overall, again, we might see an uptrend, but we need to see higher highs and higher lows being formed. It's just Monday afternoon, guys. Probably overnight or tomorrow morning, we're gonna get a clear indication. We're moving on to the cable, guys, which is just retesting the 200 moving average to the downside as things stand right now. 136.55 for the pound this afternoon. Let's see what's going to happen. RSI stochastic at their lows, still pointing downwards. Let's see if we're going to see a bounce from this 200 moving average, guys. Then we might want to go for long positions. Yeah, with a very shy take profit. Yeah, somewhere in between. Okay. But let's see what's going to happen. Quick look on a 4-hour chart. Again, on the 4-hour chart, looking at the big picture, once again, you see how many times we had this retest to the downside of the 200 MA. So I wouldn't be surprised if we're going to see a retest to the downside once again at 135.41. Yeah, but we're going to have a few announcements on the pound tomorrow morning. So let's see how the markets will react. Now, the dollar seems to be strengthening this afternoon versus the JPY, 103.91, just short of the 104 flat level, with the RSI stochastic still pointing upwards, still showing us they might have a bit of room to go. Overall, a ranging market for USD JPY on a 4-hour chart, guys, but a ranging market might give us good entries and good exits. At least we have a benchmark. Yeah, we have a reference point. Let's see what is happening with the Aussie dollar. The Aussie dollar is suffering this afternoon, 0.7712 for the Aussie dollar. Again, a retest to the downside of that 200 MA at 0.7636 seems imminent as things stand right now, with the RSI and stochastic both pointing downwards. Right, USD CAD on the other hand, a bit of positivity on the USD CAD, 127.37, which is 30-40 pips away from that 200 moving average to the upside. We saw a retest twice of that 200 MA to the upside. I wouldn't be surprised if we're going to see a third one, but let's see what follows after. Okay, RSI stochastic still in the very close to the overbought levels, but they might still push a bit higher. Now, let's see how the markets opened this afternoon, guys. The S&P and the Dow after the weekend. There we go. Positive opening on the S&P. 3854.30 this afternoon for the S&P. And a positive opening for the Dow as well. 660.78, sorry, for the Dow this afternoon. Right. Positive opening overall. Let's see. They should be doing okay. Right, the US dollar index, which started pushing higher just 1 hour ahead of the US markets open, started calming down, 9044 for the US dollar index. Overall, still in a downtrend, even though it is flirting with that 200 moving average up and down time to time. Now, if the US dollar goes down, yeah, we might be looking at gold futures going up, 1856.75 for gold futures this afternoon. Again, a shy flirt with that 200 moving average. Okay, where the price is right now. If we're going to see a push through that 200 moving average, okay, then we might see gold pushing a bit higher, yet maybe towards 1866, maybe towards 1880, somewhere there, 1870, somewhere in that region. Okay, there is potential. Now, Brent oil futures on a 60-minute chart, guys, $55.34 this afternoon. Seems to be an upward movement as things stand right now. Again, a flirt with that 200 MA. The price is trying to push through that 200 MA as we speak. If that's the case, then probably we're going to see crude oil trading slightly higher today. Now, silver futures, guys. Silver futures, again, very, very shy, just like gold, 25.56 for silver futures this afternoon. However, what gives me a bit of hope is the higher high that we see there. Okay, the RSI pointing upwards. The stochastic is still undecided, still in between. Okay, but the price is flirting, is pushing through that 200 MA. Okay, we're very close to it as we speak. So let's see what's going to happen. And now everyone's favorite, guys, the Bitcoin. Let's see how the Bitcoin is doing this afternoon. It seems set for a correction, seems to be on track for a correction, guys. $34,466 for Bitcoin this afternoon. In an impressive correction, we had a ranging market, okay, and then we had a bit of a boost of the markets. This is what is happening, the RSI stochastic way up into the overbought levels. Now, this is the view on a 60-minute chart, guys, but Have a look at it on a 4-hour chart. As I was discussing with Neil Wilson a few minutes ago, very, very key, a very important key level where Bitcoin is right now, guys. If it's going to break out, okay, through that channel, through that line and settle above, we might see a rebound. However, more signs are pointing to a potential retest to the downside, towards the 30,000 mark. We saw 31,000 being reached yesterday. We had a retest. Where is it? There we go, 31.3. Okay, on Friday, guys, Thursday or Friday, we saw a retest of 29. So we might see a retest again to the 30,000, 30,300, somewhere in that region. Okay, don't be surprised if that happens. But we're going to find out more tomorrow afternoon. Meanwhile, Ethereum, guys, seems to be doing well. $1,419.65 for Ethereum this afternoon. Impressive rally for Ethereum. Impressive rally for Bitcoin as well. Okay, in the last day or so. However, Ethereum seems to be giving us a bit more hope for the upside than for the downside. I wish the same could be said about Bitcoin, but hey, we're gonna see what happens. Now, quick look at the signals, guys. The market should have settled by now. We are a good 40 minutes into the US trading session, and this afternoon we see the euro and the pound with red strong sell indications versus the US dollar. So Euro USD, GBP USD, strong sell as things stand right now. USD JPY, USD CHF, strong buy. Green all over the charts for the US dollar this afternoon. We see the Aussie dollar, guys, in a strong sell indication, and the euro versus the pound, guys, with full red on the charts. Again, strong sell indication by investing.com. USD CAD, on the other hand, 3 green strong buy positions. Right, the euro dropping versus the CHF. The euro dropping versus the Japanese yen versus the pound and versus the US dollar. There you go, guys. 4 potential sell positions for this afternoon on the euro versus its other peers. Now, the pound, on the other hand, seems to be dropping versus the Japanese yen, but seems to be strengthening versus the Swiss franc. GBP CHF, 4 green this afternoon, guys. 4 strong buy positions, strong buy indications. Quick look at commodities, and I'll let you go in just a minute because I know you're busy and you want to place some positions this afternoon. I can feel it. I can feel the trading tension from the other side of the monitor. Come on. Right, please don't tell me that investing.com crashed again after the US Open. It's Monday. It happens sometimes. Right, no, nothing really going on. Come on, guys. Come on, website, you can do it. No, it doesn't want to work. Right, it doesn't want to work, guys. I tried. So, where? There you go. You see? Right. It was afraid I'm going to let it go. So gold and silver, strong sell this afternoon, half an hour into the US trading session. Copper is inclining to a sell as well. It's neutral as we speak right now. Crude oil, WTI, and Brent oil and natural gas, guys, indicate a strong buy, a potential strong buy for this afternoon, as well as US wheat. Okay, now, quick look at the Wall Street indices, the S&P and the Dow this afternoon, guys. There we go. Right, I like to see a lot of green on the charts. I'm a positive person. So NASDAQ 100, the S&P 500, 4 green, strong buy indications from investing.com. The Dow Jones, though, strong sell for the Dow this afternoon. The daily remains a buy, so we might see the Dow crashing for 2-3 hours, and then it might turn around. The Nasdaq, guys, 4 green for the Nasdaq, 4 strong buy positions, and the Russell 2000, the small cap 2000, again 4 green for the Russell this afternoon. A lot of positivity, apart from the Dow Jones, guys. A lot of positivity on the major US indices. Right now, this is it. Leave me alone. It's only Monday. I don't want to get tired. Join me again tomorrow, guys. Same time, same place for another round of Market Talks. Until then, like, share, subscribe, support us in delivering more great content. And if you had a good or a bad experience in Forex trading, please do contact us and come forward. And we're going to make sure your good or bad experience will be heard through our daily broadcasts. This is it, guys. Have a nice evening. Remember to trade responsibly and may all your trades be in the money.